If you've been trading for a while and have spent any time over the weekend on social media or financial forums, you will have no doubt seen other traders reference something known as the cut report or a commitment of traders, or in particular referencing something known as net positions, implying that a market is net long or net short, or rather a group of traders are specifically net long or net short. And they're implying that that is either bullish by being net long or bearish by being net short. My name is Ray Gilmore, and I'm going to show you in this video how looking at that information can be very misleading. So I want to help you understand what they're actually saying in these posts and show you how you should be looking at the information for yourselves. So I've just come on to X. I've put in cut report in the search for this weekend, and you'll see, as I mentioned, gold and silver. This is one post. I've no idea who this is. But I'm just illustrating what they're showing here is the net position. The green is the net position of managed money, and the red line is the net position for producers and merchants. Don't need to go into that for now. Just showing you that the tendency is for people online to reference net positions. Here is Ethereum, and we've got the, again, net positions here for the different groups of traders. Scrolling down, what else do we see? Again, net positions. This time it's soybeans. You can see net positions here for the different groups of traders. Now, the problem with that is generally to say they will imply that a group of traders are, if they're net long, they are bullish. They have been buying. They're increasing their long exposure in the market, and therefore they are bullish, and that is a bullish implication in the market. If you come over onto our platform, we get to see the data in a lot more detail. Now, I do not know why a large number of traders, when they look at the commitment of traders data, known as the cut report, they look at net positions. But the detail or the real understanding of what's going on with those positions is actually looking at the positions themselves. And that is the long and the short, not just the net. I want to illustrate something to you, and this is something that's very evident at this point in time. We're going to take a look at crude oil. Crude oil, if we bring this up, I'm not going to go into the full detail of the cut report and the various groups, commercials, non-commercials. I'm not going into that in this video. I just want to show how looking at net positions and taking people's word for that a market is net long or net short is very, very misleading. And crude is a very good example at this point in time. If we zoom in and see what's actually been happening recently, we'll focus on the net position of the commercials at this point, just to illustrate my point. Net position has been increasing. Okay, we've come from minus 260,000 contracts to just minus 130. If we zoom out and give us some context of that, if we zoom out, we'll see that that's actually been currently the largest net position they've had since back here back in 2012. Yeah, so that sounds like a very bullish condition. It's their largest net exposure in that market for 14 years, going on 15 years. The problem is net position is just simply the long minus the shorts, okay? But when traders see, and they talk about it online and in forums, they see net position increasing like it is here. You see the net position going up. They're saying they're increasing their long exposure. They're more bullish on the market, okay? And here we can actually see in crude that it's not the case. If we actually look at the number of long contracts, the long contracts are reducing. Now, you might think, well, how can their net position be increasing if they're not continuing to buy? The reason why the net position is changing is because their shorts are also being cut, and they're being cut at a faster rate than the shorts, or than the long, sorry, which is why the net position is actually going up. You'll see there, if I turn those long and the shorts off, the net position is going up. Now, that's the big problem when it comes to looking at net positions and net positions only. It does not actually tell you if there's what buying and selling activity is going on. The only way to see that buying and selling activity is by looking at the buying and selling activity. Net positions is a very good reference starting point, but it's a starting point. It is not a reference to how bullish or bearish a group of traders are on a market. Looking at the commercials here in crude, if you were only referencing net, you would say they're getting very bullish, but clearly they're not bullish on this market. They're cutting their exposure. They're actually leaving the market, which has a tendency of having a bearish implication in the market when traders are leaving. you tend to see a market moving lower. They're cutting their shorts, they're cutting their longs, their exposure is being reduced. It's just their short exposure has been reduced faster, which therefore increasing their net position. That is not bullish. If we actually look at the data overall, we take a look at the non-commercials as well, we'll actually see the only money being added to this market is actually the speculative short position. Okay, you can see the short contracts, this red line here from the non-commercials, is the only one that's actually increased. Everything else is being cut and reduced. This is not a bullish implication for the market at all. Traders leaving the market is negative, tends to have a negative implication, and the only money flowing in on the short side, also bearish. So when you're looking, or if you see traders reference positions and they're referencing the net positions of a market, and they're saying a group of traders have increased their net long or have they increased their net short, take it with a pinch of salt. There's nothing wrong with it. It's not inaccurate. It is what they have been doing. But if you want to actually take it as information that you can use from on a trading basis, and say, just looking down through on X, we'll see just constant reference to net positions. This one, the net positions of managed money on gold. Again, there's net positions across. What are we looking at here? This is sugar. Lots of them. What have we got here? Cocoa. They're all referencing net positions. Now, it's not wrong. That is the net positions that's there, but it's misleading if you don't know what's actually underneath the surface. And the only way to see what's underneath the surface is by looking at the actual buying and selling. And it will often completely change the picture of what's going on. The simple way for me to reference it is if you're looking at a price chart. This is a price chart of the S&P 500. If you're looking at a price chart, the candles are the actual buying and selling activity. But if we were to turn those candles off, the moving averages are essentially what I'd refer to as the net positions. The net, on average, we can see is going up. You can see the moving average is pushing higher. They're starting to move lower through this area. But we're missing a huge piece of the puzzle. And the main piece of the puzzle we actually want to see is the price action itself, the buying and selling activity. So why would you not actually want to look at that activity? And the answer, hopefully, is that you obviously would want to see that activity. This is the activity that traders that are referencing net positions are not talking about. I don't know why. I don't know who these people are. I'm not saying there's anything wrong. But looking at net positions is like looking at a price chart and only looking at the moving averages. And it will be wrong. It will definitely be wrong. You'll see here, there's the 200 moving average continue to push higher. The market's clearly in a downtrend. And that's why we need to look at the detail. Moving averages help with certain things, as does net positions. It's a nice high-level way to start analysis into a market. But it's to start analysis into a market. If you want to finish the analysis of a market, we need to look at the actual detail, the true buying and selling, the same way we should be looking at the price action on a chart. Okay, so just something I see constantly every week online, on social media. I see traders referencing the Commitment to Traders report, and they're always talking about net positions. And they're saying they're increasing their net exposure, there are net long, they're net short, etc., etc. But they're not, or very rarely do they actually look at the positions. If you really want to know what's going on in a market and you want to use that information, make sure you're looking at the actual positions, the actual buying and selling activity. And you can do that. There's not many ways to access that. But I say if you jump onto our website, you get a chance to take a look at the numbers and do look at the actual buying and selling activity. It will completely change how you would look at the data, particularly if you've only ever referenced net positions before. Hopefully that's helpful. Hopefully it'll keep you in the straight and narrow and not using misleading information possibly, or information that's not giving you the full picture whenever you're looking at data online.